Okay, here's how to start an investing portfolio from scratch and get yourself invested in the easiest way possible. I'll share everything I wish I'd known when I started more than 10 years ago, and I'll explain everything as simply as I can. And I'll also show you some real-world examples using the investing apps that I personally use. Now, just before you watch this video, if you are really new to investing, you might want to go back and watch my beginner's guide before you watch this one. I will keep things really simple here, but if you ever do get stuck, don't forget that you can always go back to the beginning and look through some of my older videos. Anyway, first off, an investing portfolio is just a really fancy way of describing what you're invested in. You could have a really simple portfolio with just one type of investment in it, or you could have a really complicated one with hundreds of different things, including stocks, gold, bonds, Bitcoin, and even a rental property. Let me say this now and be really clear. A complicated investment portfolio does not mean a better portfolio. Just because someone has lots of different things in their portfolio will not make them instantly better than someone who keeps it simple. In fact, it's usually true that the simpler you can make things, the better you end up. But I'll touch on that subject a bit later when we get into the details. So where do we start? Well, why don't we have a look at some of the best investors in the whole world and see what they do first? Now, many of you will already have heard of this person, but Warren Buffett is probably the most famous investor in the world. His track record is unmatched over almost 6 decades, and since 1965, he has earned a return of almost 20% every single year compounded. That might not sound like much, but that works out to be a profit of more than 4 million% in total. For every £1 or dollar invested back in 1965, you'd be getting back a return of 40,000 times. To have £1 million, you would have just needed a £25 investment. Now, I'm sure we'd all love to match those returns over the next few decades, but the truth is that only very few people will ever get these. In fact, most professional investors and most retail investors like you or me don't get anywhere close to that. This is because picking stocks and deciding what to invest in is way harder than it sounds. The data doesn't lie here, I'm afraid. More than 90% of investing funds could not be a simple index over the past 10 years, even during a crazy bull market. Warren Buffett knows this too, and he's said on many occasions before that most people would be far better off if they just invested into index funds. So this is where we'll spend most of our time. However, I do want to say that investing is totally personal and up to you. If you want to pick some stocks, then be my guest, but just be aware of the risks involved. For me, I have most of my investments in index funds, but then I do also have some individual stocks too. I've decided to allow myself some freedom because I know that if I don't do that, then I might be tempted to make some other bad decisions. Investing is such a personal thing, and what is right for you could be totally wrong for someone else, so just remember that. Anyway, here's the golden rules of creating an investing portfolio. My 3 steps go like this. Firstly, you want to make sure that you use the right type of investing accounts. Secondly, you want to make sure that you choose a well-diversified set of investments. And finally, you want to make sure that you stick with this for the long run. Ideally for a period of at least 5 years, but the longer the better. Now, I've gone into a lot more detail on step 1 in other videos, but as a quick recap, if you're based in the UK and you're going to be investing for the long run, you almost certainly will want to use an ISA account, specifically the Stocks and Shares ISA, as this allows you to invest up to £20,000 per tax year completely tax-free. This means that there won't be any taxes to pay in 5 years, 10 years, or even longer if you've managed to make a lot of money investing. There's no dividends taxes, no capital gains taxes, and nothing to worry about like that. Most people in the UK still don't have one of these accounts, so if you do manage to open one, you already put yourself far ahead of most people. To set one up, let me just show you how easy it is. As a quick example, I'll show you using a platform that I use personally, Trading212, as they offer a free Stocks and Shares ISA account. Also, if you follow my link in the description, you'll get yourself a free fractional share up to the value of £100 once you deposit just £1 into your account. You fill out your details here, nice and easy, confirm your identity, choose Stocks and Shares ISA, and then you're ready to get started investing. But just before you go ahead and make some purchases, let me just explain what you should be looking out for before you go all in on some random company that your mate just told you all about. Now, point 2 of my golden rules is the most important one. We need to make a well-diversified set of investments to put into our portfolio. The reason for this is that we don't want to risk all of our money in one single thing. If that one investment were to go bust, then we could end up losing everything, and that is the last thing we want to happen. Imagine if you'd put all of your money into buying Nokia stock just as the iPhone started to take off. you would have had a pretty bad time over the past few decades. What you need is lots of different types of investment to help diversify yourself against all of the risks involved with investing. Now, if you want to know which stocks to buy or how many stocks you should add to your portfolio, there are plenty of people out there who will claim to know the exact answers. However, be warned, nobody knows the future and there are loads of grifters out there trying to profit from everyone's ignorance. What I will say here is that to be a successful investor and make a well-diversified portfolio, you don't need to know anything at all about individual stocks or how to read financial statements. In fact, you can create a really well-diversified portfolio by buying just one single type of investment. And that investment is called an index fund. I've spoken about these a lot on this channel before, but basically an index fund is something that contains lots of companies all inside a single investment. For example, you can buy an index fund that has thousands of companies inside of it. This might be something like a global index fund, or you can buy an index fund which follows the S&P 500, which is a list of the 500 largest companies based in the US. You can even buy index funds which just cover UK stocks like the FTSE 100, which you've already probably heard of. Whatever you choose, you don't need to know anything at all about individual stocks. In fact, like I mentioned earlier, most professionals will fail to beat the returns of a basic index fund over the long run. It sounds crazy the more you say it, but index funds are truly one of the best financial products to ever be created over the past few decades. In one simple package, they give you a well-diversified portfolio where you can end up owning shares in companies from almost every industry and country. For example, with a simple global index fund, you end up with all of the biggest names in technology, financials, real estate, energy, and everything else. All that means is that without knowing anything about stocks and company financial statements, you will become a shareholder in hundreds or maybe even thousands of companies. What this will do is help protect your money and reduce your level of risk from one individual company collapsing or going bankrupt. It doesn't guarantee any future returns though. Like anything, there's always risk. But it does stop you relying too heavily on one bet to pay off. If you take anything away from this point, I want you to remember one single key fact, and that is that most companies end up failing at some point. Very few companies deliver amazing returns to investors, and most of them actually do pretty poorly. You might get lucky and pick a big winner, but most people end up doing very badly. Index funds, in my humble opinion at least, should be the bedrock of any decent investing portfolio. And just going back to the big man himself we mentioned earlier, he has said this countless times before.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund.
If one of the most successful investors in the world keeps banging on about them, I think it's worth paying attention. Okay, with that point covered, let's head back into your new Stocks and Shares ISA and show you some options of what index funds you could choose. I've actually made a really simple portfolio that you can copy if you like called Own the World, and it includes one simple global index fund, which you can see here. I'll leave a link in the description below for you to check it out. As always though, please make sure you do your own research and make sure that this is right for you. There are lots of other index funds available that are global, or maybe they just cover something like the S&P 500. For now, I don't want to cover too many of those details as I've done that in other videos, and I'll continue to grow my Investing for Beginners playlist for 2025 here on YouTube. Let me just say this now too, if you also want to go ahead and pick some stocks and buy shares in individual companies in your portfolio, go ahead, it's completely up to you. You can buy things like gold, you can buy bonds, you can even buy funds which track every kind of index you can imagine. Personally, I have most of my investing in index funds, but I do allow myself to have some individual stocks as well, and I've shared how I invest my portfolio in my last video, which I'll pop up on screen now. I still think that it makes most sense to have the core of your portfolio in low-cost passive index funds like the one I've just shown you, but I have to stress once again that it's up to you. I think the temptation is to make investing too complicated, and believe me, I've done this in the past where my investments were all over the place. I ended up with too many investments and didn't make sense at all. And I know lots of other people end up in the same place as over the years you just keep adding more and more and more. If you can avoid that trap, I think you'll do very well, but it's all up to you. Now, the final point I want to cover is this one. Whatever portfolio you choose and how you make up your investments, you have to think about this for the long run. This is because anything can happen in the short term. And no matter how smart you might think you are, even a great investment can lose value during bad times. Just think about it like this. If you're a keen viewer of the stock market, you'll already know just how volatile things can be in any single year. For example, just look at the last few years if we take the S&P 500 as an example. As you can see, it's been a very good time to be an investor. However, we still had 2022 as a terrible year for returns. The stock market dropped almost 20% during the year, and even investments like bonds had a terrible time. There was almost nowhere to hide, and no matter what investment you chose, you would have lost money. However, just remember a couple of things, and this will really help you with your investing. Firstly, anytime the stock market is down or you see your investments in the negative, remember that this is just a loss on paper. It's not real. It doesn't feel nice at all, but it's not something that you can avoid if you want to be an investor, as there will always be times when our investments lose value, whether that's during 1 year or maybe even a multi-year recession. The volatility of your investments is just the price you have to pay if you want to be involved, so get used to it as soon as you can. Secondly, zoom out and consider this. Although there are no guarantees when it comes to investing, if you are consistent and do this for the long run, you put yourself in a far better position than someone who only invests for a couple of years. Have a look at this. On screen now is a graph showing the percentage of time investors would have lost money depending on how long they've stayed invested. You'll notice one very simple takeaway from this data, which goes back all the way until 1871, and that is the longer you stay invested, the much lower chance you would have had of losing money in real terms. This shouldn't be much of a surprise when you think about what you're actually doing when you create an investing portfolio. You're buying real companies who make real profits, and although companies come and go, the best companies keep coming up with ways to grow their profits, grow their business, and ultimately make themselves way more valuable. As an investor, you benefit from that. Do this for the long run and you'll give yourself the best chance. Choose not to invest and you're guaranteed to miss out, but I'll leave that decision up to you. On Trading 212 and some other platforms, you can set yourself up to automatically invest for you, and you can choose exactly when and how you want to do this. For example, you could say you want £100 a month to go into your investment of a single global index fund, and you want this to happen on the 1st of every month. I also have this set up on my other investing accounts as well, so no matter what happens, I just get money invested every single month as soon as I get paid, and all of my other bills leave my account too. Personally, I just treat my investments like any other bill where I know it needs to get paid and I don't expect to get that money back or need it anytime soon. I think if you can get to a position like that, you'll give yourself such a good chance to do really well as an investor. Remember, I've said this in other videos before, but if you can invest any money at all each month, you are doing better than 90% of people in the UK. You're not falling behind. Quick summary and recap time then. If you want to build an investing portfolio, make sure you use the right type of account. One of the most powerful for us in the UK is the Stocks and Shares ISA, and I'll leave the links to the accounts that I use in the description below. Secondly, you'll probably want to use index funds as the main part or even the entire part of your investment portfolios. There is no need to know anything at all about individual stocks, so get that investing myth out of your head right now. I shared a portfolio as an example, and I'll be doing loads more videos to help you this year on this topic. Then finally, as I've just covered, stick with this for the long run. Investing is something you must do for the long run. It sounds boring, it's not a get-rich-quick scheme, and there will be times when you'll doubt it all. But it can only work over the long run. Keep doing this month after month, treat it like you would any other bill in your life, and you'll probably end up far better off than most people. If you want to make investing any more complicated than this, you're free to do that, and always make sure you invest in things that match your own goals and level of risk. But just remember, complicated does not mean better. Most professionals can't beat the performance and returns of a basic index fund. Now, if you want to look at all of my investing portfolios, go ahead and watch this video where I share how everything is set up. Or you can also go back to my beginner's guide, which goes into a little more detail of some of the things I've missed in this video. Good luck and happy investing.